I know you like to buy into success stories, but you don't like to buy high tech. And it seems to me, say, in the case of Microsoft, that 10 years from now, they'll be doing software development, just like 10 years from now, Coke will be selling sugared water. And what I'm wondering is why you feel that way when it seems certain companies, high-tech companies, are predictable. And it also seems that in the early 90s, you mentioned you were going to buy a pharmaceutical company, which also seems like high-tech to me. So that's my question.
Yeah, well, I think we said that with the pharmaceutical companies, we wouldn't have known how to pick out which one. We would have thought the industry as a group would do well. From those levels of 1993, you cannot buy high-tech companies at anything like at levels that are commensurate with the levels that the pharmaceutical companies were selling at in 93. I would, and getting to the first part of your question, I think it's much easier to predict the relative strength that Coke will enjoy in the soft drink world than the amount of strength that Microsoft will possess in the software world. That's not to knock Microsoft at all. If I had to bet on anybody, I'd certainly bet on Microsoft, bet heavily if I had to bet, but I don't have to bet. And I don't see that world as clearly as I see the soft drink world. Now, somebody that has a lot of familiarity with software may very well see it that way, and they're entitled to, if it's true they have superior knowledge and they act on it, they're entitled to make money from that superior knowledge. There's nothing wrong with that. I know I don't have that kind of knowledge, and I simply think, and I do think that if you have a general knowledge of business over decades, that you would regard the industry they're in as less predictable than the soft drink industry. Now, it may also be that even though it's less predictable, that there's a whole lot more money to be made, so that if you're right, that the payoff is much larger. But we are perfectly willing to trade away a big payoff for a certain payoff, and that's the way we're put together. It does not knock the ability of other people to make those decisions. I mean, I asked, first time I met Bill Gates in 1991, I said, if you're going to go away on a desert island for 10 years, you had to put your stock in two companies in the high-tech business, which would they be? And he named two very good stocks. And if I'd bought both of them, we'd have made a lot more money than we made even buying Coca-Cola. But he also would have said at the same time that if he went away, he'd rather buy Coca-Cola, because he would have felt sure about that happening. It's, different people understand different businesses, and the important thing is to know which ones you do understand and when you're operating within what I call your circle of competence. And the software business is not within my circle of competence, and I don't think it's within Charlie's. Charlie?
Well, I certainly agree with that. I think there are interesting questions, too, about how far the whole field can go. Take jet airplane travel below the speed of sound. It's been pretty static in terms of the technology for a long, long time. The big Boeing airliner is much the same as it was 20 or 30 years ago. And I think a lot of these businesses are quite dependent on the technology continuing to gallop and do more and more for people. Take pharmaceuticals. If they never invented any more pharmaceuticals, it would be a terrible business. And I don't know what happens once you get unlimited bandwidth into the house and way more options. And beyond a certain point, it strikes me that there might be a surfeit of anybody's interest in the field. I don't know where that point is, whether it's 20 years out or 30 years out, but it would affect me a little.
The dilly bar is more certain to be here in 10 years than any software application that we know. But that's maybe because we understand dilly bars and not software. In the whole United States, which is by far the most prosperous country in the world, the whole United States, there are probably around 400 companies, 400 total companies that are earning $200 million a year after tax. Of those 400, you can name them. I mean, you can start, if you say banks, you can say Citigroup and Chase and Wells Fargo, and you can name 10 or 15 of them. And if you name consumer goods, you can say Procter & Gamble and Coca-Cola and Gillette, and you can name a whole bunch of them. You can almost, of those 400, you can probably name 350. If 5 years from now, instead of 400 being on that list, there'll probably be 450 on the list, maybe 475. A lot of those will be companies that are earning between $150 and $200 million now. So there'll probably be 20, some number like 20 that call it come from nowhere. Now, if you look at the number of companies that are selling today at a price which implies 200 million or more of earnings right today, you will find dozens and dozens in the high-tech arena. And a very large percentage of those companies are not going to fulfill people's expectations. I can't tell you which ones. Biotech tech was all the rage some years back. How many of those companies are making a couple $100 million a year? It just doesn't happen. It's not that easy to make lots of money in a business in a capitalistic society. There are people that are looking at what you're doing every day and trying to figure out a way to do it better and to underprice you or bring out a better product or whatever it may be. And a few companies make it. But here in the United States, after all of these decades and decades and decades of wonderful economic development, we've got about 400 companies that have hit the level that would be required of a company that would have a market cap of $3 billion. And some companies are getting $3 billion of market cap the day they come out, virtually. So you want to think about the math of all this. Zone 8.
Hello, my name is Larry Widman from Minot, North Dakota. You've already hinted about Coke and Gillette's current valuations and also about their great prospects for the future. But in the past year, both stocks have been down 30 to 50% from their highs. How much farther would they have had to fall before your criteria of margin of safety been satisfied and allowed you to purchase more shares? And two, has the Disney Cap Cities merger gone as well as you would have hoped? And has the future prospects of Disney changed in your opinion?
First question, that's a good question on Coke and Gillette, because obviously we think about the businesses that we're the most familiar with and where we're committed. Neither one of those businesses got to the price that left us happy putting new money in, but we're quite happy, very happy owning those businesses, and we'll be happy owning them for a very long time to come. But it's some evidence of where the market has been and is that even when they ran into some tougher business conditions than they anticipated, that their stocks did not get down to the prices that caused us to get excited about them. Charlie, you want to comment on that or the second part?
No, but I do want to remind people that the Dilly Bar is a Dairy Queen product.
Mm-hmm. And they are good, I can tell you that.
I wouldn't want the shareholders to believe that the commercial standards of this operation are faltering. Generally speaking, trying to dance in and out of the companies you really love on a long-term basis has not been a good idea for most investors. And we're quite content to sit with our best holdings.
People have tried to do that with Berkshire over the years, and I've had some friends that thought it was getting a little ahead of itself from time to time, and they thought they'd sell and buy it back cheaper and everything. It's pretty tough to do. You have to make two decisions right. You have to sell it right first, and then you have to buy it right later on, and usually you have to pay some tax in between. If you get into a wonderful business, best thing to do is to stick with it. Coke and Gillette both experienced disappointments to their management below what they anticipated a year and a half ago or whenever it was, and below what we anticipated. But that will happen over time. It happens with some of our wholly owned businesses from time to time. Sometimes they do better than we anticipate too. But it's not the nature that everything goes in a nice, straight, smooth line upward. You mentioned Cap Cities. Parts of Cap Cities have done extraordinarily well, for example. But in the network business, if you go back 30 years and look at what network has been on top, you find that no one stays on top or on the bottom indefinitely. It's a competitive world, as I mentioned earlier, and sometimes your competitors' correct moves, your own incorrect moves, the world environment, all of those things can interrupt trend lines. I see nothing that's happened in the last year in terms of the long-term trend line of the blade and razor business, which is the one I referred to as inevitable at Gillette. I mean, there are other businesses that are not in the same category as the blade and razor business. Coke, fortunately, has virtually its entire business in soft drinks, and so it comprises almost 100% of the whole there. But I see nothing that would change the long-term future of either the blade and razor business or Coke's position in the soft drink business.
Good afternoon, Mr. Buffett, and good afternoon, Mr. Munger. My name is Monish Pabrai, and I'm from the Chicago area. You may, at the pace at which you answer my letters, point by point. I have a question for you related to circle of competence. I have a notion that both Mr. Munger and yourself understand the Kleiner Perkins model of early stage venture capital investing, and currently they're focused in the internet space extremely well. My notion is that I think it is well within your circle of competence to understand what they do, just like you understand what your managers at See's Candy or Executive Jets do. So the question is that with the internet, I think we're seeing a change that has not been seen in the last 500 years as humans. We haven't seen something that is as dramatic and as profound that's going to come upon us. If, let's say, a John Doerr at Kleiner Perkins approached you and said that they were starting, let's say, $1 billion early stage or later stage internet investment fund that Kleiner would manage, would you consider participating in that investment to be within your circle of competence if it were offered at terms that looked attractive?
I agree with the first part of what you said. I mean, I'm not sure that it'll necessarily will be the most important thing in the last 500 years in the commercial world, but it could well be, and if it isn't, it's right up the most important thing in the last 500 years in the commercial world, but it could well be, and if it isn't, it's right up the development. But and I would say that Charlie and I both understand the process of early investment / promotion probably as well as anyone. We haven't participated in it. There's certain things we don't even like about it, but we do understand it, right, Charlie? And I would say that no, we would not have an interest in investing in the fund. We do not necessarily regard the internet. There's no question, if you're in the early stages of promotion, and particularly if you've got a reputation as a successful in that, but in this case it wouldn't make much difference because the whole field has gone wild, you will make a lot of money selling to the next stage and the next stage and the next stage. But in terms of picking out businesses that are going to do wonderfully as businesses, not as stocks for a while, but as businesses, I don't think it's necessarily so easy in the internet world. And I would say that if you were to ask some very top names in the field to name the next 5 companies out of the chute, or the next 10 companies out of the chute, and predict that one of them will earn, say, the $200 million I used as a threshold 6 or 7 years from now, I'm not so sure if they gave you a list that they would name a single one. That doesn't mean they might not make a lot of money by being early investors in them because they sell out to the next group and so on. But in the end, they have to succeed as businesses. And if you will succeed as businesses, the internet will have a huge impact on the world. But I'm not so sure that makes it an easy investment decision. Charlie?
Well, at least it's not an easy investment decision for us. And that's what we're looking for.
Yeah. We will never turn our money over to somebody else. If we're going to lose your money as Berkshire shareholders, we're going to lose it ourselves, and we're going to come back and look you in the eye and tell you how we lost it. We are not going to say this game is too tough.